Well, so my company KMI, Kalmars Inc., went up into space on a SpaceX rocket 2 days ago.
Welcome to the VC React podcast. Every week, we bring you insights and reactions from top VCs reacting to weekly news on startups, VC funds, and investment rounds. We have a great episode for you today with wonderful guests. Siddiqui, General Partner at Sukna Ventures, Jamil Shinawi, Founding Partner at Actual VC, Omar Rebhan, Founding Partner at Saudi Angel Investors. And we have a special guest today, Ziad Al-Masri from Intaj, to tell us more about the MENA ICT Forum. In the video description, you can find more details on our guests, their LinkedIn profiles, and links to their companies' websites. Our weekly news are brought to you by FWDstart, a twice-weekly newsletter that breaks down what's happening in the MENA startup, VC, and tech space. And as always, from FWDstart, we have my co-host, Jamie Lane. What's happening this week, Jamie?
Good morning, Ahmad. So first things first, before we get into the news for the past week, coming up on the 20th of November, we have the MENA ICT Forum. So very happy to have Ziad Masri from Intaj Jordan here this morning. So Ziad, the floor is yours. Tell us a small bit about the upcoming MENA ICT Forum.
Thank you, Jamie. Hello, everyone. We have our biannual event happening by Intaj. We're an association out of Jordan. This MENA ICT Forum, it's a biannual event at the Dead Sea, so you're all welcome to come over to and attend the event. Free invitation for all. We have a track dedicated for the startups. We host over 70 startups in Jordan from different stages, from prototype, pre-MVP, and MVP across all sectors. And we're bringing in over 47 regional VCs to meet with them over 2 days to discuss about investments, to discuss about a strategy, in addition to the local Jordanian startups and ecosystem. 2 years ago, we had the same event and very, very successful. We got a good pipeline of investments, a good pipeline of potential deals and partnerships that are happening between startups and grouping and entering into a new market. So it's a very exciting week we're going to have on the 20th and the 21st. And we've got also startups from Jordan, from Lebanon, Palestine. We have a few from Bahrain, Qatar, and East Africa that are going to be with us.
My understanding is like there's some events on the side, like the Startup Village Arabia. Can you tell us about that as well?
Startup Village Arabia, we've got also panel discussions and what support the government is doing from Modi, which is the ministry, the YTJ, World Bank, IFC projects as well, in addition to other funding agencies. We've got some discussions. We've got also a startup competition that's happening at the end of the first day. 1 minute elevator pitch, straight one after the other. In addition to have a separate track as well for the ICT companies talking about the future of digital transformation, bringing in AI, data privacy, and cybersecurity. In addition
there has to be an AI.
You have to. Of course. I mean, you have to have this pizza topping of AI across everything now, and you can add to it data privacy, which is big now across all the local regional markets.
And it's happening in the Dead Sea area.
Yeah,
weather will be perfect there.
Yes,
it's
weather
will be cold
beautiful
in Amman, but it's gonna be really good in the Dead Sea area.
Yeah. So you're all invited. Thank
you so much, Ziad.
Viewers and listeners as well.
Thank you, Ziad.
Thank you so much, Ziad.
Thank you.
So, Jamie, what else is happening this week?
What else is happening this week? Okay, so let's maybe start with some DeepTech and this rather interesting beta, somewhere in between lab fund, which is launched to back Saudi and Asian deep tech startups. So I'm going to go with beta lab fund. This is something that was announced back in March 2024, but as with most either VC studios or VCs, obviously had an announcement last week at FII. And this one was rather interesting and kind of caught the eye. So it's sort of a collaboration between the Beta Lab Fund and the Hong Kong Science and Technology Parks. So in terms of this collaboration, essentially they've signed an agreement, so it's going to facilitate funding potentially for over 1,200 Hong Kong-based startups, introducing them to Beta Lab for potential investment. I guess in terms of what the Saudi startup ecosystem gets is obviously maybe insights and expertise from those startups in fields that they're particularly proficient in, whether that be AI, biotech, or green technology. So in terms of, I guess, some context on Beta Lab, so they function as both a VC firm and co-creation studio, so offers early stage startups a suite of services, so product and business development to capital, etc. Back in May, I believe it was, they launched a DeepTech startups program as well. The idea being to attract talent in biotech, food tech, and AI. That had a suite of backers from the Saudi Ministry of Investment, KBW Ventures, etc. So yeah, so it's a $300 million fund. Not necessarily clear exactly how they intend to deploy that or what the makeup of it is, but rather interesting. And I guess it's a continued trend that we've seen between, I guess, the regional ecosystem and Asia in particular. I think we've seen that especially with the UAE and South Korea, and now we have Hong Kong and Saudi.
When I saw the news, I was like, let me go through the company's website and see if they have portfolio companies already, to see what kind of sectors, what kind of companies we are talking about when we say deep tech. What does it really mean? And let's actually do this together. It seems the company has already started a year and a half ago, so it's not new, but the announcement is new, that they closed the fund, maybe $300 million. So let's see those companies. I like this logo. I want to see what this company is first. Okay. Animal-free, plug-and-play milk replacement for large-scale dairy applications. Okay, very interesting. So this is considered deep tech, and let's see what other companies they have. So this one is transforming back office financial operations with Genesis One. So it seems like a fintech company. Again, I still don't know what they have here, just trying to understand them through their portfolio. Let's see this one. Your future factory is here, transforming industries through digital manufacturing of high-value products with complex supply chains. A 3D printer, I don't know, let's see.
Yeah, so additive manufacturing, I believe.
Okay. Last one, let's see this one. Hi, I'm Sola, the AI assistant for female well-being. Okay, so this is AI software. Let's see one more thing before I hand it over to you guys. Let's see where the companies are. So this one is in France. This one, Texas. This one, let's see. Oh, Chicago. So they're all international companies. This one, Cyprus. Wow. Okay, truly international, all over the place. My question is, with this big $300 million fund for deep tech, what kind of industries, what kind of companies are we going to see? And what do you think about this international portfolio so far?
So, context is everything. And Jamie, thank you for always providing us with, more content than we see on the page. So, look, my initial reaction was, I looked at the portfolio and I didn't really see a lot of deep tech. But then I think Jamie's context was super helpful, which is they started off as a venture studio and a fund earlier. Maybe this new deep tech fund hasn't really deployed anything in the deep tech space. That's I guess all I would say about my sort of initial reaction. To answer you about your question about how do I feel about deep tech startups, deep tech deal flow. Well, clearly I'm happy about that. So as a VC in the market, I want to see more deal flow, and I definitely want to see more interesting sort of deal flow. And we've done a couple of deep tech deals, and we're in the process of potentially doing 2 more as we speak. So I can't mention names, but we've done deep tech. I think we want to see more. And one of the things, of course, is that when you look at deep tech stuff, it is intellectually sort of challenging. And so, it makes me feel stupid, which means, I need to do more studying and learning. And obviously that's the best part of being a VC. The only thing I would say is that if you're going to be a deep tech investor, you need to make sure that you have the relevant skill set to be able to invest in a market, in opportunities that are really not 10-year, but actually much longer term horizons. And so, it's about technology, it's about validating the technology and whether it works, but also the market.
Omar, yeah. Yeah, no, well said. I'm going to be optimistic here, and I'm not sure when these portfolio companies were actually, basically when they invested in them. So maybe the strategy kind of shifted along the way or something of that sort. But another thing, it could be that they have a plan for each of these investments to push them in a certain direction. Yeah, a couple of the companies absolutely could be pushed into deep tech. The one that you just talked about, the 3D printer one, absolutely could be. They must have something, or maybe they could have some sort of IP that have more implications in the future. But I'm looking forward to other sectors, to be honest, right, that are relevant to let's say Saudi, right? If it's a partnership with different entities in Hong Kong, Indonesia, and so on, we have a big behemoth of energy. That alone, you can just deep dive into it. But I'm very optimistic, and I really like it. I'm at the same position as Asher, and I look forward to it. I think another thing is sometimes I'm not a big fan of these of terminologies that just get thrown every couple of years, right? Deep tech. I did deep tech 15 years ago. I think we talked about it, Ahmed, right? Like, oh, I thought it was deep tech. Deep tech today is different than it was 15 years ago. But no, we did complicated systems from the ground up. So I try not to pay much attention to that, but I think of, okay, what is this going to impact the field that it's in, or the sector that it's in?
Jamil, what kind of companies do you expect to see? And I'll throw in one more question. This is a collaboration between Saudi and Southeast Asia, and 4 of the 7 companies we've seen on the portfolio are outside of those 2 regions, in Europe and the US.
First of all, I'm a little bit disappointed I didn't see a chips company right there, the initial portfolio. It's like, I don't know, coming to Saudi and not buying dates. It's one thing we have, and it's really good. So, but I'm a deep tech investor. That's my focus. As Omar was saying, it is a bit of a mystery, just like AI. It doesn't have a solid definition, but we do have one of our own, which is basically you're going upstream in any science and trying to be foundational. This is what we define as deep tech. Like, look at the current portfolio, and it's very nice to bridge the gap for a lot of LPs that are used to SaaS. And this is honestly what I see. So I think they might have appropriated the portfolio to just raise it at the beginning. Might be wrong, might be right, I don't know. I hope that their direction really goes deep tech for real. I'm also a deep tech founder. Everything I've done was foundational. All my 25 startups, and that's why I have a huge miss ratio. But I wear both hats. Like, I'm the serial entrepreneur and I'm the investor as well. But when it comes to companies that are in the region today and eventually try and pack up and leave, unfortunately, because there are, as Asher said, deep tech as an investment requires a huge amount of understanding, and we don't have a lot of specialized investors in the region.
Okay, let me push back a little bit. So we're seeing this big fund, $300 million. This could be a growth stage investor for deep tech. Do you think we will have more early stage investors in deep tech, knowing that there is a big investor on the way that might invest in later stages in their companies?
So first of all, I just want to say, guys, you do a good job there. You did something that I should have done as well, which is scroll down to the bottom and see that there's no Hong Kong or Asian companies. That's a good thing, because I think that means that, this is just legacy portfolio and it's fine. So let's just take the optimistic sort of assumption here, which as Omar was doing, which is this is a new fund, this is a new partnership that they just inked. We're going to see more deal flow. To be honest, this is a good thing. I have been working with the Koreans to help us get more deep tech deal flow, because there's a lot of IP, there's a lot of early signs of product market fit in their local market. And then we're looking for companies that have applications to Saudi and then sort of help them come here. And what's interesting is we found is that because deep tech companies are boring and aren't sexy, but make a lot of money and solve real problems, difficult problems, they have already, we've seen companies that are already doing millions, if not tens of millions of dollars of revenue in Saudi Arabia, and we didn't even know that they existed. So, I think that that's there. One other thing I want to say before I answer your question, which is I like what Omar said, which is, your deep tech, it may not be my deep tech, and when are we talking? So 10 years ago, I was an LP in a fund, which was a deep tech fund, and they were working on, sort of AI stuff. Today, they're like, AI, that's not deep tech. Deep tech is more challenging, complex problems. So what Jamil was saying, which is, today's deep tech may not be tomorrow's deep tech, but titles aside, okay, complex problems solved with complex technology. Let's just think about it from that lens. This is great. I'd actually like to see both. I'd like to see more early stage deal flow coming. So I'm an early stage investor, it's pre-seed seed. So I'm happy if there's a follow-on investor for some of our deep tech portfolio companies, of course. But I would be happier if it was more early stage as well, and I'll tell you why. To Jamil's comment, it's not just about the specialization of investors who understand deep tech, because I think we have plenty of smart people who can figure it out, somehow. The problem is a market size thing. So for complex problems using complex technology, you need specific types of industries. And while we have some of those industries that could be initial customers, we don't have enough of those. So the reality is, in my humble opinion, and I hope I don't upset anybody, the natural home for most deep tech companies will tend to be in industrialized, developed economies. And so that's sort of the natural home for them. But I do think that given that we're early and we're in the process of industrializing our region, it kind of makes sense for us to have just sort of a smaller, maybe, but a vibrant deep tech ecosystem. And just before I hand over, there is a lot of cool tech that we've seen coming out of Kaust. Kaust is fantastic. Like a lot of the founders, and what's beautiful is that Kaust is like the United Nations. I've worked with kids who are from like Mexico and Egypt and Palestine and Korea, and they're working with some former Ivy League professor, and they've got state-of-the-art tech. And we've been able to capitalize on those opportunities because we get in at like lower entry points, and then eventually they move to the US, and obviously the world changes.
So I mean, just comment very quickly. So the thing with deep tech that I don't think geography actually matters. It actually doesn't. So there are no markets that actually matter with deep tech, because usually you're really trying to do something foundational that goes and applies globally. So I'll start with that, and then there is a huge misconception that deep tech has to stay 10 and 12 years until it actually liquidates. And that is a misconception, and I'm talking out of practice, because the thing with deep tech is actually, as you said also, Asher, that you've seen a couple of companies that are doing tens of millions in Saudi. Deep tech, when applied, is actually quite powerful. And it's actually extremely versatile, because one deep tech innovation could actually serve 10 industries. So you can have so many ways to actually go to market to de-risk it as well. So I actually think I don't want to see less or more necessarily. And when it comes to early stage, I would like to see more grants. The EU today makes more than 80% of the global, what is perceived today as deep tech. And the reason is their grant system. We see a lot of movement right now with RDI in Saudi Arabia, in UAE, in Jordan, in Tunisia, in Morocco, in Egypt. These countries I just mentioned actually have active RDI programs that are evolving, and that is impacting a lot. As a deep tech investor, I can't focus on a market. Otherwise, I'll be dumb. I need to shut down my fund. I have to be global. Otherwise, like in terms of sourcing startups and the startups focus, like the biggest turnoff to us is when we see a startup and they say, okay, I'm just doing US, or I'm just doing Saudi, or I'm just doing UAE. And that's it. They're never going to make it.
Omar, what do you think on investing in global by nature? They have to be global if they're deep tech. And the second thing is fintech is sexy in MENA and in Saudi, but would this big fund encourage more early stage VCs invest in deep tech?
I agree with everything that has been said, to be honest. At this point, but especially what Jamil just mentioned on, the geography is irrelevant to a point. However, what's relevant is how you can localize that technology at some point of time and how you implement it. One thing that maybe some of you, if not all, know that the biggest issue with RDI is commercialization. You can have the best, research and development, the greatest IPs, but pushing it to that, commercialization through the commercialization phase is the issue. And this actually rings a bell, whatever is happening with this fund, through one of the partners that is setting it up, which is the Research and Development Authority, I believe. I read it in the article. They've been working on this since 2018. Now it's part of a big, document that they issued where I just contributed to one page with some sort of some numbers. And so that's what I want to talk about is when the investment thesis is applied with this kind of setup, because I see the partners. And Asher mentioned, KAUST was there. The University of Hong Kong was there. Yeah, great, because you need the labs, you need, the experimentation, you need the testing, and then also you need the business partners that will, take it under their wing and make sure that these deep techs work. In terms of early investors, I would love to see some sort of support. Grants were mentioned. I think it's a package of all, right? You need grants, you need governments, you need investors, you need, people who just hold signs in the street and say, hey, invest in deep tech, right? But I believe one of the challenges for early, VCs to jump in, because some of these, let's say some of the deal flow, as Asher mentioned, could be industrialized by nature. It would have higher demands in terms of the financial needs, right? It will be higher valuations. So an early investor, like I can't give you 15 million if I'm an early investor, 100 million, right? It depends. Most of the funds that we have here cannot do that. So that could be a challenge. If they could do it, I think it's healthy to have, say, Sukna Ventures, if they could do that, or anybody, anybody who has the ability to do it. I think it's vital. Is it necessary? No. Because we have funds like this, and we have also that's one of the programs, right? And I think it's a package of all. In short.
Sorry, I just want to add something because actually I was just thinking that it's actually relevant to this T-shirt here. This was a deep tech company 4 or 5 years ago. Obviously, as technology and as time has gone by, it's maybe less deep tech, but it's still pretty sexy deep tech stuff. In this orbital debris capture space. So the case study here is that they've raised very limited amounts of venture dollars. So they look extremely capital efficient, and they look like they are, the cap table is actually pretty nice, like vast majority of it. It looks like a normal B2B SaaS company, capital efficient. But the reason why is because they had access to research funding, grant funding, but also they had access to customers. And that's what I'm talking about. So at a very early stage, at a pre-seed stage, they won 5 contracts from NASA and ISSF and US Space Force. And then they won 4 more. Those contracts is funding. That funding fuels to build, and that's what you need. So when I was talking, so I kind of sort of like disagree with Jamil, where, I think that we can have deep tech anywhere. That's not true, because if you don't have enough customers who are willing to fund, this very expensive development process, then it's very hard. And I'm not talking about investors or grants. As Omar said, it's a package, right? And the package must include customers who are willing to invest in things that may or may not pan out. So far, I think the only industry that I'm seeing in the region that's doing it is, I think, maybe Omar mentioned, which is the oil and gas, the energy companies. The energy companies actually run pilots. I've seen them for years, like a decade or more, run pilots, fund these pilots. And that's basically what NASA's doing, right? And some of them pan out, some of them don't. They have massive IP that they're sitting on. We need to see more of that. And until we see more of that, then, I think we're kind of on the same page, but I don't feel like it's as big as we think it's going to be, because of the fact that you just need the types of companies who can actually afford to do that. I come from the telecom space, and I'd be fired for doing stupid shit like that, because that's I don't need deep tech to make money, I don't need to have a massive IP portfolio. Telecoms is a consumer business, very profitable consumer business, but ultimately it's a
But
consumer business.
it's changing now, Asher, on the telecom.
It's changing, yes.
That
transition is pretty exciting. Yes, I agree.
Wait, how is it changing now?
They want to be part of that space now. I mean, I think one of your stories is related that we're going to discuss it about the Tally venture investment. I mean, that is clear, and I know a little bit about their just their general thesis, especially of Tally, because I sat with their leadership a while back, and it's just that is part of, again, the package thing. Yeah, you could be a bystander, or you could just be part of the game but they always have a commercial angle, right? Which is, it has to be. You're running a business at the end of the day when it comes to telecom. You want to invest in things that you can integrate into your overall ecosystem. And it's very clear to me, but when we discuss it, maybe we can have a chat about it.
Okay, let's move on to the next story, Jamie.
Yeah, let's move on to the next one. And I kind of toyed with whether or not to include this, and I wasn't going to, but obviously Insider's Series E announcement over the last couple of days sort of prompted me to include it. So obviously that was a huge 500 million Series E, which was led by General Atlantic, obviously major global growth investor, would have taken early stakes in Facebook and Uber. So I guess in tandem with this investment, and tying in, I guess, with FYI last week, they're finally opening their office based in Riyadh in Saudi. They've been a pretty active investor. I think their first investment in the region was back in 2012. So they've invested since then in companies like Iowa, Property Finder, and Network International. As well, obviously, this is a broader trend, I guess, of private equity firms establishing a more on-the-ground presence in the region, whether that be BlackRock, TPG Capital, etc. In terms of, I guess, backing, we saw SVC invested in one of their private equity funds earlier this year as well. I think that was somewhere in the region of like $30 million investment even. So one would think that the opening of this particular office obviously will lend itself to, in terms of proximity perspective, to other sovereign wealth funds in the region perhaps. But it's good at the same time to see those dollars being, pumped back into the region as opposed to, just being somewhat mildly kind of parasitic relationship maybe that was there before.
Is this a trend that we will see more of in the future?
I think that they don't have an option at this point. I mean, there is regulation inside in certain aspects, but I think that's mostly in consultancies and big companies. But I believe we will see the trend more and more because of all of these initiatives that are happening. It's very clear. It's moving to I would say, compared to let's say 10 years ago, this is exponential, right? And we still need more. So I do believe it will continue. Jamie mentioned a really good point of the old relationship between fund managers or funds and also investors. It was, we just give us the money and we'll talk later when it's return time. And there's a missing link there because it needs to be, we want some impact to happen here. We need it to be deployed here. We need that chain reaction. So the government led it by, regulation. And I believe investors and people in the region, and whether they're Saudi or not Saudi, anybody here want to see, hey, I want to see where my money is going. I want to, you want to be part of that journey. But what's more important is the impact of it on the sector invested in. And the impact is greater. I know there's a lot of, again, fancy words thrown in there, but the impact is real if it's actually applied. And it's really, you're talking about expertise being built up from the ground, especially new sectors or focuses. You're talking about, the jobs that gets created. And you're talking about also the effect of, a big company that, births a lot of startups that comes with it. So the impact is real. And if that doesn't happen, I don't think the institutions or the VCs or even the individual investors will play ball anymore. So the trend will continue and has to continue, is what I'm trying to say.
I'm actually really quite thrilled and happy to see a fund like General Atlantic come, even if they're coming for the money. I honestly don't care. I mean, we need this. We need new blood. We need different directions. VC and startups are always about, changing tides and changing winds. I mean, when I started Ahoy, like in 2018, which was the startup I started, and I looked at General Atlantic, General Catalyst, Khosla, and I was like, wow. I mean, these are my dream investors. Of course, I've received non-investment, nothing from any VC, but we did it. We broke through. And when we spoke to them at that time, they were like, why you don't get any venture investment from somebody who's there? And the mandates were not just matching DeepTech. So I think now that they are here, we actually can validate those responses that we got from all these funds when they were in the US, when they were getting a lot of contact from a lot of startups. And I think they have done a generational step in the ecosystem in North America, where they went and built DeepTech, and then they went in the second vintage, invested in a downstream kind of application use case that depended on their best vintage, and their vintages were actually valued, like, appreciating in value to each other. And that experience, I think, will be extremely valuable. And I think they might bring some of that here, but it is a very different market in there. So I wish them all the best.
Sure.
I'm pleased that GA are going to be here, but I think it's unfair to say that GA are coming to the region now or opening up in Riyadh, because the reality is, so I met them in 2011-12 the first time in the region in Dubai, and I've met them at that time in Saudi. They're one of the firms that have been building relationships here. And so think about this. So they didn't really have institutional government capital, which is strategic capital. They have several significant LPs from the region, from Saudi, who are pure financial investors. What I liked about them was that they took money, but they're also open to scoping out opportunities, and so they've invested in the region for so long. These are the types of investors we want first, right? While I'm okay with all these carpetbaggers who come and want to raise money and leave, these types of guys are the types of guys that we should be rewarding. So I'm glad that they're doing that. So them setting up in Saudi an office, I think that to me is like a small thing and a small signal. But the bigger thing is the fact that, they've done stuff, they're going to do more. I'm just happy because there's one of the things that freaks me out and keeps me up at night is who is going to lead the Series B or C of one of my companies, because right now there's like 3 or 4 names that can do that. And so I'd like to see more of these people. And even if they're carpetbaggers and they just come and do that, I'm like, please come, because I need more of that.
Yeah, they've been active.
This is positive.
Already invested more than $1 billion in MENA companies already. And
so they know they're
point,
a much better investor for the region because they know it. But sorry, go ahead.
Yeah, and to your point, Omar, I think Sanabil invested in more than 35 funds in the US. I think if half of them come here and deploy some of that capital in the region.
They do, yes. I'm an LP in 5 of the funds that Sanabil invested in because I referred them to them. So purely as an LP, I referred them to them because I thought they were interesting. And to be honest, that strength of that relationship did help because in the last 8 to 12 months, we've had 5 or 6 of our portfolio companies raise follow-on capital from Silicon Valley VCs. And surprisingly, 5 of those were relationships that we already had. And so I do think that, people forget venture is a relationship business. It's a people business. And so and this is a lesson I learned a long time ago, which is it doesn't matter if you're the best technology or you're the best founder. What matters is, can you get the best relationships, build the best relationships on top of doing all of that? Because often what I find is that, I would read TechCrunch and I'm like, I've seen like 3 or 4 or 5 companies. And I'm like, Sequoia just backed the 3rd best company. What a shame. But the reality is that's the one that becomes the winner because they're backed by, the market maker or Andreessen or whatever. So it is important. These signals matter, deep pockets matter, the networks matter. So I'm actually very pleased that that's happening. I do think that while this is, obviously good for us and we want it, I also think that forcing and mandating doesn't get you the right outcomes. Natural
I fully
understanding.
agree. I fully agree.
Understanding the venture ecosystem, and Sanabel, by the way, has done this very, very well because they understand that. And part of the reason why is because several people, and I shouldn't plug them because they're friends of mine, but the reality is they've been in the Bay Area, they understand how it works, they understood relationships, so and the team also has built relationships. So even though they're LPs, they don't sit like bosses, they build relationships with those GPs because that's really what it's about. And if you build relationships with your GPs, then you're more likely to see a much better response than to tell them, this is our mandate and you need to do this. People may still do it, but the problem is they may do it in a way that doesn't help the ecosystem. What I'm trying to say is that if you force a Silicon Valley-based VC firm to, put $5 million back into the ecosystem, they'll just come and they'll give money to some random startup, which isn't really the right startup. And that's happened, by the way. If you've seen some of the sexiest startups that had, brand logos, and then they blew up because their business models didn't make sense. That's not helpful for the ecosystem because what it's doing, sorry, I'm going on a rant here, but like, I'm passionate about this. What the signal that you're sending is that emerging, operators, people who want to start something, that that is success, and that's not success. Success is hard. I think Jamil has a much better story about how it's hard to build a company, and so what you want is the right poster childs, not these quick, I need to deploy because I need to tick the box. Let me just put something into any sexy company and job done. And then the impact of that is actually a lack of confidence in the ecosystem, which then turns off local LPs, which is really what we need, right? We need private. The government's doing a very good job, but what we need is further more engagement from private capital in the local market. And to be honest, by the way, we closed our fund, we hit our target, so that's done. But what I'm worried about is, and I'm sympathetic to local LPs, is that when I talk to local LPs who say they're not so optimistic about the local market, and they're still continuing to, family offices, they still continue to put capital to work in Silicon Valley because of these signals that they get, where they see all these companies that blow up because the unit economics didn't work. And when they talk to me or other VCs or angels, they're like, yeah, of course, the unit economics never worked. They didn't work at pre-seed. They were never going to work.
Well said.
No, well said.
We feel the passion. We feel the passion, Asher. And I fully agree with you. Mandates sometimes can ruin, not build the ecosystem.
Who's this random guy, Ahmad, that Arzan is partnered up with?
The name
it's crazy.
sounds
this random
familiar.
guy?
I think he has a podcast, as far as I'm aware. But yeah. So I'm led to believe.
Maybe you should invite me to this podcast.
Tell me more.
I feel like deferring to you in this, Ahmad, but I'll give a very brief context setting. It feels a bit too meta for me, but
okay.
Arzan VC have partnered, as we said, with this guy called Ahmad. Again, don't know a whole lot about him, to launch Revenue
it's
Capital.
Our Ahmad.
I believe.
Congratulations.
Thank you.
Congratulations.
To launch Revenue Capital. So it's a revenue-based financing firm aimed at supporting startups across the MENA region. So initial seed investment of $2 million from Arzan VC and Arzan Financial Group, plus a credit facility from AFG's network. Apparently going to address the growing need for non-dilutive financing options in the region, Ahmad.
Well, honestly, the idea here is, hey, we need to provide alternative capital to startups, not only VC, not only angel investment, not only banks or venture debt. We have other options, and we're trying to, introduce one more option. I think this was introduced already in the MENA region 2 to 3 years ago by ERAD, Capify, FlapCap, Flow 48, and they're doing an amazing job. And I think we need more. And we're adding Revenue Capital as another source of capital for revenue-based financing to all venture-backed startups. And we're focusing only on venture-backed startups that have predictable revenues. They have some runway. They need some cash to do like a marketing campaign, to buy inventory for a season, to prepare for a specific event or launch a new product, etc. So that's the focus here. And I think this will add something. Hopefully this will add something to the ecosystem of MENA region. Now we are focusing on MENA, but I think eventually we are global investors. We're financial investors. We're not focusing only on the MENA region, but we're starting in MENA region as Revenue Capital.
Congratulations. That sounds like
Thank you so much.
a lot of fun.
So let me ask you for advice now.
I was going to ask you a question. So
Yeah, please, go ahead.
I'm glad you mentioned the examples of the startups. And I think what you did is basically just broaden the horizon of it and say, hey, we want to do something similar, but hey, are you sector agnostic? You don't really care? Can you just tell us a little bit more about it? Because congratulations, Ahmed. This is absolutely great news.
Thank you.
What stage as well? My question, stages.
Yeah. Okay, let me talk about the stage first. It's around Series A, so pre-post Series A.
Yeah.
We cannot invest or provide loans to pre-seed or seed companies unless they have some predictable revenues. They have to have at least $20,000 of revenues every month. That's our sweet spot. If it's before that, it's very risky for us, especially that we do not ask for collateral. It's hard for us to get earlier than that. And if we talk about Series C plus, I think those companies might not need the small tickets that we invest. We invest or give loans between 50K to 500K. So that's the ticket size that we provide. And for the sector, we're sector agnostic. The only condition we have is you have to have high margins because this is how revenue-based financing works. And the margins should be at least 50%, 50 plus. If you have less than that, and we take 10 or 15% of your revenues every month to pay back the loan, how much is left for you to sustain the company? So that's why we focus on tech startups, venture-backed, high margins, predictable revenues.
And did you say, what was your threshold? How much recurring revenue per month did you say is the minimum?
At least $20K.
So I was surprised with that because you were saying Series A. So the vast majority of so the vast majority of our pre-seed companies are already running at 20 to 50K MRR before we invest. So so I guess the question is,
this is something we need to learn from you guys. So if that's the case, we can definitely go to pre-seed. It doesn't matter the name of the stage. It matters the numbers.
The threshold. Okay, that's very
exactly.
Well, I do. So first of all, I'm very pleased because there's a couple of things here. One is our portfolio companies. Obviously, sometimes you just want a little bit of extra here to non-dilutive for whatever reason, especially if there's cap table issues. But the other thing is just so this is just for my personal portfolio. But if I look outside my portfolio, there's so many amazing founders doing great work, building great businesses, but they plateau. They're still profitable. They're still growing. They're just not growing at a clip that they need to. And this is typically around pre-Series A. And this is true in the US and it's true here. And I've seen these businesses become incredibly profitable and continue to grow, maybe not at the venture scale, but the problem, I guess what I'm trying to talk about is that there is this drop-off opportunity where venture doesn't follow on into pre-Series A, Series A because they see that it's not going to grow, but it's still a great business. I mean, so what I tend to do is I tend to help them raise capital from alternative sources because I'm building relationships because I'm thinking if this guy is going to be successful, which he is or she is, then hopefully they'll remember me when I'm raising fund 2 or 3 because they're going to be rich enough to be my LP. So I do think that there's an opportunity for, not just venture, but also like these other businesses that do get to scale,
Yeah, this opens up more potential customers for us.
And you can partner up with VCs on that because we see good deals that we actually do, like they're off thesis because of that. So, but we want to be helpful because they are good founders.
And that's actually my question to you guys. How can we best structure this to work with VCs, whether it's for portfolio companies or, as you mentioned, Asher, other companies that you see, but they're perfect fit for our case. Our go-to-market strategy is through VCs. This is how we get our customers.
I'm not a VC, guys, but I actually been on the startup side, not as much as everyone here, especially Jamil. But the only advice that I would give just generally is for you, it's not if this company is profitable or if it's actually growing at a really high rate. As long as it's growing and the cash flow is healthy. So your game is a cash flow game. I just want to make sure they got money, so I give my money back in a sense, right? But how to structure it generally, I think you would have more experienced people who can weigh on that. To be honest, I think maybe the folks at Irad are a great source of information on that, and I know you're friends with them, but. As I haven't been actually also and I haven't seen the work closely of any fund of the sort. It will be interesting to see it. Yes, you're a financial kind of investor, and so it would feel like you're basically a bank in a sense. But hey, people like that. You don't take my equity, and we work something out. Something interesting. I noticed actually some of the big funds around here, they started doing some of these instruments on the side. So they have their
last week we talked about NICE from
which is
STV.
so exactly. So there is there is something, because the period of harvest, right, is actually way longer with the traditional funds, as you all know, and with this it's like, hey, I can maybe make something happen in a shorter period. So that's now I'm gonna just give you a question or ask you a question, because I'm interested if you've honed down of how you want those timelines to be, or are you still establishing the structure in terms of the periods of investments, and what are what do you expect to see, or is it still being figured out? I think I should be part of the podcast right now. I'm asking a lot of questions.
Yeah. Please do, yes.
Sorry about that.
We'll have you as a permanent guest now.
Yeah.
So you mean the terms of the loans?
The loans, are you trying to do something that everybody's used to? Are you doing some new kind of, setup?
Yeah, for us, of course, it's a learning curve. We're starting where the 4 companies that are already here in the MENA region ended or reached. So we're saying, hey, this is a short-term loan, 50 to 500K. The loans terms would be 3 to 9 months maximum. It's all below 1 year. It's quick, short-term, small loans. And the interest rate or murabaha rate that we charge is basically 1.5 to 2.5% a month. This is the new standard and revenue-based financing, the short-term revenue-based financing. There's the long-term revenue-based financing, which is 2 to 3 years, and that has a different way to structure it. But for us, it's a very specific rate, and we're very data-heavy, meaning we ask the founders to connect their systems to us through the APIs that they use. So their accounting software, their marketing software, their customer metrics software, all of these. And then through our machine learning and AI models, we analyze all this data. We compare them to benchmarks. We score these companies, and then we decide whether first we want to give them the loan or not. And then second, if we decide yes, how much money we give them based on their revenues over the past year or so. And based on our prediction models for their revenues in the next, again, short term, we're not predicting the future, we're just predicting 3 to 9 months. That's it. So how much money to give them, how much to charge them based on the risk profile of the company, and of course, what would be the term of the loan. That's why we're data heavy. And this is the model that we've seen work best both in MENA and in the US, and we're just trying to follow the steps of the people who already started before us.
Congratulations, Ahmed. Sounds amazing.
Yeah, congratulations, and so let's do a deal here. Let's Shark Tank style. Let's set up a call.
All right.
So from a VC point of view, so when I was at 500, some of my team members actually started doing this. They left 500, and then on the side they set up these revenue-based models, and then they started harvesting from the portfolio. So from my perspective, it makes a lot of sense, right? As an investor, there are times when you need a little bit more runway, but dilution is an issue. And so I would say, partner, I mean, again, venture is a relationship-driven business. So what I would do is, build those relationships, get actively involved in the deal flow that people, funds are looking at, and sort of go and do the deals with them. Not only just portfolio, because the thing is with portfolio companies that are already there, you also run the risk of being, the shill, the one that we're going to use to help the companies that are maybe laggards. But when you're doing deals with the VCs, then your risks are aligned. There's an alignment of everything, right? Because nobody has informational arbitrage. There's no informational sort of disconnect here. So alignment of information and whatnot. So, happy to collaborate with you on deals.
Great.
And maybe you can share deals with us as well. So,
Of course, would love to. And I really look at it as a win-win-win situation.
It's a win-win-win.
It's a win for us, of course. It's a win for the company itself. They're getting non-dilutive capital, and it's a win for the VC because they're helping the portfolio company without affecting the cap table.
I mean, Ahmed, I'll be more than happy to also, we have this 2469 community, which is a community of startups. Actually comes and talks there a few times. And mentors and talks to startups about, a lot of tips and hints. In 2469, there is like a database of 1.5 million companies, startups around the world. And some of them B2B, I think in the sweet spot of what you're talking about as well.
Yeah, would love to. Thank you so much, everyone.
The next and final story. So let's go to North Ladder and Tally Ventures, which Omar mentioned earlier. So North Ladder, they're a device trade-in platform operating already across 10 different countries. So they've raised a 10 million Series B that's going to help with their global expansion. So the round was led by Tally Ventures, which is a corporate VC arm of STC Group, and also their participation as well from the Dutch Founders Fund and Crescent Ventures. I guess in terms of some more background maybe on North Ladder, I think it's Dubai headquartered. I think they have an office now located in Amsterdam in the Netherlands as well. So it offers a trading experience. So features like automated assessments, home pickups, end-to-end support, all stuff like that. Obviously, I guess their unique thing is they have like a unique sort of auction system. So it maximizes the residual value for users and obviously, circular economy, sustainability and all that jazz. So in terms of Tally Ventures and some context, and I think Omar will provide a bit more insight than I am. Launched, as I said, by STC Group. So they're looking at high growth tech startups from early to late stages.
Asher is the telecom expert in this, so he can maybe give us some insight.
Sure. Well, actually, so I do know quite a bit about, this space and this company as well. So it's nothing new. I mean, obviously they're solving a great problem, and this is an interesting solution. It kind of makes sense for a telco-related VC to kind of be backing this. But I've seen this. So there was a company called E18 Corp, which was backed by Michael Lintz at Kleiner Perkins. He left, and then and I got to know him in 2010, 11 in those days. So I came across this company. It was very relevant. I think later on it was rebranded to Hyla. This is and it was founded by the Radio Shack, former Radio Shack CEO. And now it's owned by Assurant. And Assurant is very active and present and has been in the region for many, many years. And they've been working with STC and Mobily and Zain and Saudi as well. So North Ladder is like interesting solution. I do think they need to work on their website.
It wasn't clear, yeah.
So,
yeah.
Asher, explain it to me like I'm a 5-year-old. What exactly do they do?
Well, they're doing in a slightly different way. They're doing pretty much what E18 Corp has been doing for over a decade and a half. I mean, there's a whole orchestration here, but in a nutshell, I've got my device and I want to trade this device in, and they have a platform which enables this device to be sold, and so I get my trade-in value. Now, they're not solving a consumer's problem necessarily. Yes. I mean, obviously they are at some point, but really what they're solving...
I can't go to them and say, hey, this is my device. No, they do it for telecoms, right?
Yeah, well, they do it for retailers, they do it for telecom operators, and so it's that whole ecosystem, and they do it for corporates. So Assurant actually works with corporates because corporates actually buy devices, they buy computers, laptops that have, and every 2 years they kind of depreciate them fully and then they sell them off. But then there's this residual value. The problem is that there's this whole cost involved with getting rid of fully depreciated digital stuff, which actually still holds value. So there's a lot of value here that's lost. And what they're doing is they're just sort of plugging into the middle. And I think they're doing some interesting things where they're leveraging some machine learning. They call it AI, but I think it's like machine learning to optimize and some AI to see and plugging into the iOS to see what the device thing is. They're solving a problem. I passed on them because the moats weren't there and the barrier, like, because I've seen these companies, there's so many of them and a lot of them. But what's interesting, by the way, Ahmed, for you, these are the types of companies, they don't die. They're actually solving a real problem. They make money. They just don't grow at venture scale, but they're real businesses solving real problems, and they're using technology and they're enabled by technology. So I would argue these are the types of companies that maybe you should look at. But anyway, that's
Omar, what do you think about the company, the deal?
I think one of the things that I'm just analyzing here, that what attracts entities like Tally Ventures, but an STC company to invest in this particular company is that I read something about white labeling. And I think they have a bigger plan, right? STC runs in 4 or 5 different markets, and they have something like that. And I think they just want to take it and just offer that seamless, interchangeability and exchange or recycling, which is a very strategic point. And I think if that's the angle for the company, that, hey, we have the software, there you go. Then that growth point that you mentioned, Asher, is actually completely different. Oh, yeah, you know what? I have this. So does that make them a SaaS company or so? I don't know. I mean, does that make them some sort of a platform? Yeah. But I think the white label makes a big difference. But I can't talk about, honestly, valuations of this company. I know nothing about it, but it's a fair game.
This makes a lot of sense. And STC is going to do really well out of this investment, because the thing is, what's missing is the distribution partners. And STC providing distribution partner makes complete sense, because they're basically double dipping. They've got a distribution partner. They're going to actually create immense value from their operational side. We as telcos did this all the time with e-recycling types or competitors. But when we never did what we should have done, which is invested in the company as well, because the valuation uptake is helpful. Jamil.
I mean, it would be really exciting to see an element of STC Pay as well in this kind of ecosystem. Think also North Ladder, and I heard this from somebody, I'm not sure about it. I think they've built an SDK, as Asher was saying, to look into the battery cycles and the counts to be able to give a really accurate close to market appraisal. I think I wouldn't be surprised if I saw STC doing a cross market or cross trade play where they move secondary devices between markets that they operate. I'm just speculating here, just for the record. And I would think that would be really exciting if they did that. We've seen it happen with automotive dealers and resellers and secondary market as well. Secondary market is really healthy. I think the last thing I'll add about this is I'm quite excited about this, because I look at North Ladder and I just see a customer to a lot of my portfolio companies. I really do. We've invested into a lot of stuff in lithium recycling and at zero waste, a lot of things to actually restore electronics, wipe out electronics as well, because a lot of corporates don't dispose of devices because they're worried about somebody being able to recover that data. Even if you format like your hard drive, you can still recover some of the data back. So that kind of stuff. So
so there was a question that you guys had. Sorry, it just they're Dubai-based company, and by the way, that makes a lot of sense. So Dubai. So this is where Dubai superpower comes in, right? Because Dubai is like very efficient logistics and trade gateway. So these types of businesses, okay, there's some venture-backed businesses now, but this business in Dubai goes back as long as electronics have existed, because Dubai is a trading hub where devices, and not just devices, but also cars and other sort of that would come to this part of the world, to Dubai. And then from Dubai, they are then repackaged, refurbished or whatever, and then they're shipped off into, say, Africa or Central Asia. And these are big markets, and those exist. So this makes sense. The problem with Dubai is that it's such a small market, acquisition matters. You need population to be able to get the high-end devices that still have life cycle that you can then use. And of course, there's a cost element here as well, because the further away it is, the higher the cost of bringing them over. So the fact that they're going to Amsterdam actually kind of makes sense. It makes a lot of sense because, you know, in Amsterdam, what you have, or the Netherlands or Holland, what you have is you've got a local market for device acquisition and a local market for demand as well, because you have all the segments. You know, what we have in Dubai is, you know, very small population, and we have this cost arbitrage where we've got low cost emerging country cost advantage that we can leverage. So when we ship things to sort of other emerging frontier markets. But in Europe, what you have is more of a healthier or more normalized sort of per capita income levels, right? You have the top and the middle and the high middle and the bottom level, and then you have the bottom. And so you've got enough of a market. It's a nice test market. So, you know, that kind of makes a lot of sense.
Don't you think they will face more challenges in Europe because it's a highly regulated market, especially with recycling and using those materials?
So actually, so to Jamil's point and Omar's point, to be honest, what North Ladder has done well is, you know, so why is it that the older companies that are there are still there, but why is North Ladder sort of like being successful is because they've really thought about that whole thing. The CE Ventures, I know the investor who led the team person, member who led that investment, and you know, she's very focused on that whole space. So from what North Ladder were doing is basically they're tapping into that, which is there is data issues. So they certify the data, right? So like that the data has been wiped. That's very important, by the way. And then the other thing is they're actually looking at the real true you know, age of this device, and they're certifying that. And so they're doing a lot of that stuff, and then they're also managing the whole process and taking responsibility for the process of you know, disposing these assets in a sort of climate friendly. So I would argue they are perfect for Europe, European sort of regulated market. But obviously they're going to Amsterdam because it's a cosmopolitan sort of bridge. It's a bit like Dubai of Europe in a way. And it's a small test enough market where if it doesn't work, they have time to figure it out before they go to other markets, which are bigger, but also much tougher. But like in my mind, I mean, it kind of makes a lot of sense. Maybe it's just because I have some insider knowledge, and so which I'm not, you know,
I'm always
can't share
happy
everything.
to
But
see local companies going global, and this one is going to Europe, which is one of the toughest markets.
Yeah.
Well, with that, thank you so much, everyone, for joining us. Thank you, Asher, Omar, Jamil, and thank you, Jamie, for giving us all those details.
Thank you, everyone.
Thank you very much, everyone.
Thank you so much.